Okay, welcome back. As you guys can see, I'm not in my usual space. My house is jam-packed right now, so my usual space is very
cluttered with children everywhere.
So anyway, but it's been too long since I did a video. It's been like, I don't know, like 3 days, and it's been gnawing at me. And so I figured that, hey, you know what? Just do it in your living room, right? Just put something together, and the space isn't important anyway, right? It's the information, hopefully. You guys can see I brought a little something from my space anyway. I brought the light, I brought the globe, right? Anyway, let's get into it. So I'm not even going to go into a technical analysis in this video because one, there are plenty of those out there for this company, and they all pretty much say the same thing, and I concur that Alibaba's business is doing very well. If you don't know by now, this is a video about Alibaba, obviously from the title, right? Their balance sheets look great. Their debt to income ratio looks great. Free cash flow look great. They're growing at a ridiculous rate every year, so on and so forth. So I won't bore you all with another video praising this company. And this video is going to seem like I'm trying to call out the guys over at Everything Money, but I promise you, I wouldn't have included them in this video if I didn't think they were misleading potentially hundreds of thousands of people into a potential terrible investment, all right, with Alibaba. Let me say, I used to be a fan of their show in the beginning when Seth was around because he at least made things entertaining. But this was before it was really sort of a clear understanding that this show was being led by a trio of assholes, quite frankly. What I'm going to talk about today is the dangers of having tunnel vision when looking at a stock, okay? When trying to put together a stock's value and understand that value. And what's even worse is buying into a computer-generated evaluation tool. Now, I would never tell you that they don't have a sound investing strategy as far as evaluating stocks are concerned, because they do have a process at least. And many of you have likely seen an episode or two from Everything Money. It's a show that prides themselves on being value investors. They used to have 3 people on the show with Seth, Mo, and Paul. Well, Seth is now gone. Either he left or he got fired. And honestly, he was the most likable piece of the trio. But the reason why I thought it was necessary to bring this channel up isn't because I'm looking to clout chase or piggyback off of their success or of them or from their followers or viewers, because they have a large following. That's not what this is about. It's really because Alibaba is by far their most talked about stock, okay, on their channel. If you go and just scroll through their videos, Alibaba will have the overwhelming amount of videos out of all the stock videos that they've done. The bigger problem that I have with this, though, is the fact that it's been overwhelmingly positive in every single video. They've been selling their subscribers on an 8-pillar process that they believe is the answer to correctly and accurately tell you whether or not a stock is a buy or not. And I'm here to tell you that I'm sorry for any of you that have bought this tool, but I believe it's a waste of money, and I'm going to tell you why. Alibaba is a company that Everything Money absolutely loves. They love to talk about it. They love to reanalyze it with their stock tool and talk about how profitable it is and what their PE ratios are, free cash flow balances, all that stuff, right? But they never really address the concerns of potential effects the political problems over in China that have absolutely completely demolished this stock. This stock is down 45% year to date, down 60% in the past year. And on the max chart, it's down 30%, which means it doesn't matter when you bought this stock, you are down. You've lost money. And to top it all off, they have no dividends. So you're getting nothing for holding this company and just losing money. And unfortunately, these guys just keep telling you all about how great the company is, how their business is expected to continue to grow 30% over the next 10 years because China's economy has so much leg room to grow. They're not concerned with the political issues over there because these guys are multi-millionaires here to sell you a product. They can afford to be down 50 to 60% in a stock and not worry about it because they have the capital to wait 5 to 10 years for a possible recovery, and that's fine for them. But you and I don't have that luxury, people. Charlie Munger, you all may have heard of him. He's known as one of the greatest investors of our time, and he's Warren Buffett's right-hand man. Very popular in the world of investing. Well, back at the beginning of the year, he reportedly doubled down on his investment with Alibaba, growing his position to over 602,060 shares. And for many investors, this signaled them to buy more. Because hey, if Charlie Munger is doing it, it's monkey see, monkey do. Obviously, it's gotta be a great stock, right? Obviously, something incredible is gonna happen, right? Now, Derek.
Are you saying that you're a better investor than Charlie Munger?
No. What I'm saying is that you never blindly follow anyone, no matter how notable they are. Let's do some simple math. Back at the time of Charlie Munger's purchase of Alibaba stock, it was sitting roughly at 120 bucks per share. So if we take half of the reported amount they owned of 602,060 shares and round down, we're gonna give him a benefit of the doubt here, then that means he bought roughly 300,000 shares at $120 per share in January, for a grand total of $36 million. Now, luckily for Munger, he turned right around and dumped those 300,000 shares a couple months later, and no one knows why, but maybe he saw this coming. Today, Alibaba stock is sitting at $65 a share. Ladies and gentlemen, that means he would have lost nearly half of that investment. That's $18 million that would have been gone in just 10 months had he kept it. And this is in addition to however much he would have lost from the other half of shares purchased, because in all likelihood, he didn't purchase at the bottom, right? Chances are he didn't purchase all the way at the bottom. He probably bought somewhere in the middle, 200 a share or 150 a share. And this is why it's important to carve your own path, because losing 18 million is nothing for someone like Charlie Munger. They playing with a whole different type of money over there. And the smaller your account, the more detrimental a massive drop in price like this is to your portfolio, especially if you're loading the bag, thinking that this stock is just gonna shoot right back up to its previous all-time highs. And who knows how long Alibaba will take to recover, if they recover at all. We don't know. I already made a video warning new investors about Alibaba 1 year ago, and since that video, the price has done nothing but free fall. China's government is playing in an entirely different ballpark. And for Chinese companies like Alibaba, Tencent, and Neo, it's either get down or lay down. Alibaba does most of their business in e-commerce, which is much like Amazon. But what a lot of investors don't understand is that China is structured a lot differently and have very, very strict guidelines when it comes to commerce. There are so many unknowns and outlying factors to consider when investing in foreign companies, especially Chinese stocks. And we don't know what may happen going forward. What I do know is that I can't afford to wait for them to figure it out, and that my money would be better off allocated somewhere else. See, Paul can get on YouTube and talk about how if the company is delisted, then he's not worried, because again, he's a multi-millionaire. Potentially losing thousands or hundreds of thousands of dollars in one stock won't affect him like it will affect the commonwealth, the common everyday investor. And hey, I agree on a fundamental level. I said this already at the beginning, that this company is amazing, but unfortunately, that's not enough to hedge against a government that can decide at any moment to turn the fate of an entire company into a downward spiral. And I want no parts of it. I don't care if this stock comes back and triples its value. I want nothing to do with this company. I want nothing to do with Chinese companies. The stock analyzer tool that these guys push on their channel is giving you the green light to buy more of this company. And yet they sit there and tell you, oh, don't just go off the stock analyzer predictions. Don't just go off the stock tool and buy when it's green. Do your own research still.
I'm sorry, but what?
How does that make any sense whatsoever? If I still need to go and do my own research to assess whether or not a company is a buy or not after using this miraculous tool, then why did I ever need it at all? And you know what's bad about this? You know what's bad about the videos that they make on Alibaba? If you go in the comment section, you have all these people thanking them for making positive videos on Alibaba so that they feel better about being down 50 and 60 and some 70% on their investment. To those of you who believe that this company will rebound to its all-time highs and beyond someday, then I wish you all the best of luck. Maybe in a couple years that'll happen and you can all then rejoice about it, if by then there isn't yet another geopolitical event to send its stock spiraling into the pits of hell. By the way, they also loved Meta stock at a cost basis of $240, guys. Meta is $90 today. They have lost their ass. Oh, and the stock that old Uncle Paul believes is so great. His cost basis for Alibaba is $154. And I know some of you may be thinking, well, that's smart. He's probably diversifying. But if there was a company that had the growth assurance that their stock analyzer tool projects, then I think he'd have a little bit more than 2% invested. Sounds like Paul might not be putting his money where his mouth is. I know the title of this video sounds like I'm trying to deter you all from investing in Alibaba, and everyone at some point or another is going to have a bad stock pick. But honestly, I just want you to be aware of the dangers and risks involved with investing in Chinese stocks. I'm staying far away from them. You calculate your own risk and ask yourself, is it worth the potential reward down the line? But those are my thoughts. You can leave yours in the comments, and as always, remember to invest diligently, but more importantly, if I haven't made it clear enough in this video, invest responsibly. Thanks for watching. Later.
Guys, I just did a tax loss harvest on Alibaba. So this is what I did. I sold all my BABA the other day.